Kia ora. Welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Even the giant American economy can't seem to maintain its momentum, with Trump grabbing at all the levers of government. He is even taking government domain names and inserting his personal interests. It'll become increasingly hard to separate real American economic data from that skewed by his army of MAGA blackshirts who have been inserted into these agencies. And the week ahead will be busy with major economic releases that will culminate with the US September non-farm payrolls report and related labour market data. Ordinarily, they will impact the policy path for the Fed this year. Markets currently expect jobs growth of less than 50,000 and are settling in to a low trajectory. Before that, we will get the ADP private employment report, results from the JOLTS report, and the Challenger job cuts report. Besides labour updates, investors will also be on alert for the risk of a US government shutdown at the start of their new fiscal year on October the 1st. And the September update of the ISM PMI is due, and analysts think it will be more contractionary than in August. And we'll also get PMI releases from China, Canada, Brazil, South Korea, and ASEAN countries. Regionally, the RBA will be reviewing its monetary policy settings on Tuesday, and now no rate cut is expected due to rising inflation pressures there, so markets expect it will stay at 3.6%. India will also be reviewing its monetary policy position late Wednesday, and no change is expected there either, keeping their rate at 5.5%. Daylight savings time has started in New Zealand, of course, but not yet in Australia, so we'll be 3 hours ahead of Eastern Australia for a while. But Queensland and Northern Territories and Western Australia do not observe daylight saving time, making it a patchwork system across their country. Over the weekend, China released August industrial profits data, after struggling all year to July to show any improvement on the equivalent month a year ago. August industrial profits rose at a good clip, and by more than 20% on the prior August lame result. There was faster growth in the private sector, while state-owned enterprises recorded a much smaller decline. And we should also note that China is about to go on its 2025 National Golden Week holiday, which will run from Wednesday, October the 1st to Wednesday, October the 8th, an extended 8-day holiday that combines National Day with the Mid-Autumn Festival. This is a major time for domestic and international travel, resulting in busy transportation and tourism activity. Businesses largely suspend their operations in this time, but key government departments do operate. Over the weekend, Singapore released industrial production data, delivering a large negative surprise. This activity was down a massive 7.8% in August from a year ago. The month-on-month data was sharply negative too. It was largely driven by big drops in the electronics and biomedical sectors, and caught analysts very much by surprise. And over the weekend, in the world's largest economy, they released personal income and spending data for August, which came in pretty much as anticipated. Personal disposable income rose 0.4% in the month from the prior month, and personal consumption expenditure rose 0.6% on the same basis. If you think about it, these are actually fast annualised rises, with costs rising much faster than incomes. The same data shows incomes are up 1.9% from a year ago, consumption up 2.7% on that year-ago basis. And as we noted, recent changes are rising much faster than these annual shifts. The Fed will have noticed too, as PCE inflation is now running well over 3% and its fastest since February. Goods inflation is at 4.2%, with durable goods up 5.2% in the year in this data. Clearly, the tariff tax effect is not transitory. The updated September University of Michigan Consumer Sentiment Survey for the US was revised slightly lower, to be 21% lower than a year ago. Consumers surveyed continued to express frustration over persistently rising prices, with 44% spontaneously mentioning to surveyors that high prices are eroding their personal finances. And they say they expect inflation to be 4.7% higher in a year's time, interestingly similar to the current goods inflation data. Markets are going to have to accept that inflation is being structurally embedded at above target levels, and that the prospect of more rate cuts is receding if the Fed is to have any credibility with its inflation-fighting mandate. Financial markets have priced in one 25 basis point cut this year, 2 by the end of 2026. Politics may deliver them, but they will be at the expense of inflation, which is clearly rising again and quite fast. And the US has also arbitrarily decided to impose new tariffs on pharmaceutical imports, adding to the costs that their consumers will have to pay, either via import duties or from new facilities being built locally. If it goes as Trump plans, the excess capacity internationally, after removing production for the US, will cause international prices to fall as US prices rise. Lose-lose for Americans, win-win for international consumers. The US Treasury 10-year yield is now at 4.19%, little change from Saturday, to be up 5 basis points from a week ago. And the price of gold will start today at $3,759 an ounce, down $14 from Saturday, but that's up $78 from a week ago. Silver had another big spurt over the weekend, and now up over $46 an ounce, a weekly gain of $3. And American oil prices are down 50 cents at just over $65 a barrel, while the international Brent price is now just over $69.50 a barrel. And the Kiwi dollar is now just under 57.7 US cents, down 10 basis points from Saturday, down 80 basis points from a week ago. Against the Aussie, we're unchanged at 88.2 Australian cents, but down 60 basis points for the week. Against the euro, we're down 10 basis points as well at 49.3 euro cents. That all means our trade-weighted index starts today at just on 65.2 and similar to Saturday at this time. And the Bitcoin price starts today at $110,271 and up 0.6% from Saturday. Volatility of the past 24 hours has been very low at just under plus or minus 0.5%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.